Hi, this is Katie Young.
This is Josh Rucker.
This is The Wealth Effect, where we talk about business, community,
personal development, and financial pathologies.
It's time, baby. It's time.
It is time.
It's tax time.
It's that time.
Tax time.
Man, you know what? Taxes. I've been an entrepreneur for about a year and a half. This is my first tax season.
Really?
Yeah. And what I've learned
Welcome
is
to the club.
Well, you know what? It's good to be here. It's good to be here.
Welcome to the club.
I figured out.
Let's give Josh a round of applause.
Some claps for Rucker being in the tax. So I figured out that I need a better tax system.
Yes.
To get cause y'all, okay. I've been preparing for tax season. This is February now. I've been preparing, quote unquote, air quotes, for tax season for a good 3 months.
3?
3. At least 3.
Okay. Got you.
Ask me what I've done for 3 months, for 90 days. I've just been rounding up receipts.
And the thing is, man, I'm gonna be honest with you. I'm transparent.
Yeah.
If it wasn't for the software I have, then most definitely I would be in the same boat.
Yeah.
But you also have to be preparing for taxes
year round. Yeah.
Like you can't wait the last minute to start to do your taxes.
Lesson learned, people. Hold on. Y'all think I'm playing?
You gonna shut it?
I'm sure.
So
look, these are all receipts, y'all. If you can't see me on the podcast,
he's just making rain. Josh can make it rain full of receipts right now, making them rain, boy. So
I need a better system.
and you know what the crazy part is that's the one thing people don't have is a system.
It's a system.
You have to be prepared, both for your personal taxes, for your business taxes, and then for any tax questions you might have. So tonight's episode is going to cover some tips about personal taxes, some tips about business taxes, and then we're going to take some questions from our Facebook audience tonight to find out if they have any tax questions, because this is the one thing that frustrates me, because I do get frustrated sometimes. Mm-hmm. If you know and understand that the president is a known business owner,
right?
If you know and understand that most people, and I say this all the time, that a lot of people that's in Congress and in Congress are business owners.
90% of them.
So if they're business owners, the president is a business owner. Even Barack Obama had a business.
Right.
What do you think you need to be doing?
These are the people who make the laws happen.
Michelle Obama just released a book. I bought the book the other day for myself personally.
Okay.
Great book.
Yeah.
Thus far, I think I read the beginning of it. So it's a great book thus far. Mm-hmm. Don't get it twisted. She wrote a book to get her story out there.
Yeah.
But that's a full-fledged business.
That's a whole business.
So if those individuals have businesses and Congress has business, the president has a business. I said this a year and a half ago. What do you think you need to probably have? A business.
Probably a business.
So let me tell you the new tax law. The new tax law is written to benefit mostly
business owners.
And so tonight we're gonna go over some tips that you can look for help your 2018 tax season.
Yeah.
2019 tax season be successful. Mm-hmm. There's some things that you need to know.
Yeah.
Number one, let's get to which one you want to do first, Josh? Employee?
Let's do employee.
Number one, employee, big change for you.
Yep.
I'm gonna give the biggest change. You no longer have personal exemptions. See, no one is telling you this. People are telling you that your standard deduction doubled. And it did. It did double. But why it doubled, you lost your personal exemptions.
Wow.
So for some people, it's gonna be good. Mm-hmm. For some people, it's not gonna be so good. You got to figure out which some people you are.
Right. Where do you fall on that?
Yeah. Absolutely. So some people are going to get a little bit higher tax refund because they doubled the standard deduction. Mm-hmm. They probably had a household. They may have 1, 2, possibly 3 children. Mm-hmm. They make a certain amount of money. They're going to benefit from it. Yeah. But the people who I have a couple right now that I was doing their taxes. The people who are married and have 1 child and then they're high income. Yeah. You're probably going to lose in the tune of about $3,000. Wow. Up to $3,000. And some people say, well, how is that possible? Yeah. Well, because the personal exemption is gone. You used to get not only for being married, filing joint, you get the $12,000. I think it was $12,150. You get that, but you also used to get $4,000 for each person that was in the household.
Okay, yeah.
You don't get the $4,000 anymore. It's gone. So because that's gone, it's fluctuating people's taxes just a little bit. Where they're like, dang, I got back more last year.
Yeah.
But it's not the fact that people are not getting their standard deduction double. It's the fact that they may be losing that $4,000 per person in the house, which can add up to a lot of deductions.
Yeah.
A lot of deductions. So that was one change for the employee. Another big change, another huge change, probably the biggest change that happened outside of business taxes being done different.
Yeah.
2106 employees' business expenses are gone. What that means is if you was an employee who you did a lot of work outside of your job, a lot of work for your job outside of your job. Let me explain. Like if you drove and your job didn't reimburse you.
Right.
I had clients like that too. They drove, didn't get reimbursed. You used to take that deduction as business miles on your personal,
on the personal side,
on your employee business expense. So everything that you got as a business, I ain't say everything, but most of you guys a business expense on the business on the side. You got up on the employee business expense, which is a 2106.
Yeah,
it's gone. Most of it's gone. It's gutted. So because most of it's gone and gutted, people are no longer going to be able to use that form anymore. So because they can't use that 2106 form anymore, they can't take the deductions
they
that we're getting.
Those deductions.
So now they're losing.
Wow, literally.
Seriously.
Yeah.
Like I was talking to a lady today. She was frustrated. She was like, Kevin, what's up with this whole part of the tax thing being gone where I could take my employee expenses? How can I? I'm like, it's gone.
You can't.
It's finished.
That only way you can get that back
that vote is sales.
Yeah. Only way you can get that is if you start a business now.
And now we can get into the business on this part of this, because those are the two big tips. Those are the two big changes. Another big change, they put a cap on the property taxes, the state and local property tax you can write off on your federal. They put a cap on that. But the thing is, having a business takes care of all of that.
All of that, man.
Like, you don't have to worry about it.
Right.
I watched an interview the other day, and I'm doing this very, very intentionally. I want you to go watch it too. Josh, you should go check this out. It was a Killer Mike interview on the Breakfast Club.
Oh, I remember. I remember seeing you talk about that.
That interview was done so well to speak to. I say it's speaking to a group of people, a generation of people that hasn't came into their own yet.
Yeah,
you know, like it's speaking to like those millennials. Like the other generation already lived, they made it, but that Killer Mike was speaking to those millennials in the sense that, look, let's get past all this stuff.
Yeah,
let's get past all the stuff, all the fluff. Let's get past all the distractions. Let's get to next level. And you don't got to be a millennial, but I'm saying he had a message from millennials. Let's get past all this nonsense and get to the bag. And he was speaking directly to minorities, black and brown people. Yeah. By saying this, specifically black people, about getting to like truth and how this stuff works. Yeah. We live in capitalism.
That's it.
Like it's not going to change.
Right.
No time soon.
At all.
Not in our lifetime.
Not in ours.
It's been going on for the past however many long years.
Right.
So my thing is this. If we are serious about building our communities, we have to be serious about business.
Yeah, we do.
We can't play.
Right.
Like, the black dollar stays in our community for 6 hours.
6 hours.
So I want people to understand, like
6 hours.
6 hours, bro.
That's
like, but like before we go to sleep tonight. I mean, we go to sleep tonight. Wake up, the black dollar gone.
That's sickening.
I don't think people understand like that statistic. I think they overlook it because it's so polarizing that they think it's fake.
I'm trying to come up with some way to bring that home, man. Like, I don't know. I'll think of one, but that's like if you understand economics and the social structures, that should hurt your stomach.
6 hours.
6 hours.
Like
we can't even make it a whole day.
Man, put it like this: it takes us about 2-3 hours to do a podcast from beginning to end.
Yeah.
Before we make it to the end of our podcast, half of the time it's gone.
It's gone. Yeah.
For how long a dollar will last in our community.
Yeah.
Like, we finished a podcast, bro.
Yeah.
It's gone.
It's gone.
It's already halfway gone. So go from
yeah, we're about 15 minutes in now.
Yeah.
It's gone.
It's halfway. It's like
It's gone.
It's gone.
Yeah.
So let me give you a comparison. I think in the Asian community, it's taking that 28 days.
Yeah.
Not hours.
Not hours.
That means that if I gave you $5 right now, Josh, it's going to stay within black people's hands for 28 days.
28 days.
You know how much flipping that is? You can flip a lot of stuff with that.
And those 28, that's a whole month. That's February.
Yeah, that's the month of February.
That's February.
They money stay in that community the whole month.
Whole month.
Imagine that. Like
What?
Compound interest works when it has something to compound.
Man, listen. The snowball effect. I think that's what I'm struggling with, because I know, like, when money stays in a centralized or localized area, it has no choice but to grow.
No choice.
No choice.
Because you keep spending it.
It keeps spending. Like when you say you the compound effect, y'all. Like, compound interest is one of my favorite things.
It is because it takes time and money into it makes it more powerful.
One thing millionaires have a lot of is
a whole bunch of time or a whole bunch of money. One or two.
One of the two, man. I ain't got a whole bunch of money.
But you got a whole bunch.
I got a whole bunch of time.
But you only got 6 hours. You feel like you only got 6 hours.
Man, okay. Maybe that's what I should do. That's what I'll do. Okay, so compound interest. I'll break it down. I won't have it to you like today or tonight or whatever, because I don't do math in my head like that. Yeah. But the compound interest, opposed to comparing, making a 5,000 investment in one account, is staying there for 6 hours.
Yeah.
Then making that same 5,000 into another account for 28 days at the same rate. At the same rate. I ain't gonna change the rates.
After 6 hours, that's gone, boy.
I'm gonna let you know. In 6 hours, you're gonna have $5,000.
So you know what? I didn't clear this up. So let me go back to the employees real quick. If you're an employee and you were up under the 2106 employee business expenses where you were using those, let me tell you like a way that you can use those again. And you need to go to your employer if you're in sales. Let me give you if you're in sales. Go to your employer and ask them to put your sales on a 1099 and pay you as a contractor. If they pay you as a contractor, you can qualify for those other expenses.
Yeah.
And once you qualify for those other expenses, you then can take those write-offs that you were taking before to make that money.
Yeah.
That may work for you.
Yeah.
So I want to give it to all employees out there. If you are one of those people who spend a lot of money, a lot of your personal money, and your company may reimburse you, or you just spend to make your money. I know some people in sales where they spend a lot of their personal money to make their money. So you need to really think about doing that. Look at becoming a contract in some part of that. I can't tell you where, but some part of that. All right, let's get to our business owners. Big changes for business owners. One big change: you cannot do entertainment anymore. It's just meals, entertainment. But you can find a way to go around and make entertainment work. It depends on how creative I'm gonna say creative and how creative they are and how much they know the tax laws. But there is a way to still get your entertainment. It'll just have to be coded under something different.
Okay.
I hope y'all caught that. Like, I can't tell you what to do because I don't know what your tax situation is.
Right.
But I can tell you that if it's entertainment, you can code it under something different and it can still work.
But you're saying just meals now are the only deductions that are covered.
Yeah, the entertainment part is gone.
Okay.
But I mean, look, as a business owner, you got 500 deductions. One of them go away, you just get another one.
I only got 499 left.
You just got to find a way.
Or I could creatively just reinvent the one that I lost.
Yeah, you can by coding it different. It's illegal. You can do it legally, morally, ethically. You can really code that expense as something different, and there are other qualifications to. There are other stipulations to code it differently. I don't have a lot of time to go into that tonight on the podcast.
No, we ain't got time like that.
That's like a class in itself.
Right.
But by doing that, by shifting that how it's coded, you can still do some entertainment. You can.
Cool.
Another big change for business owners. Point blank and period, you won. And you laugh about this so serious. The new tax law that was rolled out, it was like one of the biggest tax changes that we had in a long time. Heavily benefited business owners. It's not even if anyone who does taxes, or anyone who's a tax strategist, or like a professional tax preparer, it heavily benefited business owners. So because it heavily benefited business.